Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We're going to go over all the moves today, some very interesting things. Even though the S&P was basically flat to positive or is flat to positive, the Fed minutes were shockingly interesting today. So remember the previous Trading the Closes and even the game plans in the morning, I've said, guys, oil is dropping, it's collapsing, gasoline is collapsing. Those are big economic indicators, but the markets are ignoring it. The stock market keeps going up and up and up, right? So what's going on? Well, today we learned something. The Federal Reserve, in their minutes, basically said not only are they going to cut in September, but they were thinking about cutting in July. Now, the stock market's pretty much ignoring it because retail traders are in charge right now, late August, waiting on the Jerome Powell speech on Friday. But to me, that's telling. That's why, right? The Fed is seeing something here in the economy. The Fed is seeing some major trouble, which is why they were even thinking about cutting in July of last year, or this year, I should say. But the point being is this, is that if they're thinking about that, they're telling you something is wrong. Oil and gasoline are confirming that. That is a big deal. All right, guys, I wanted to get that point across to you because it's a really, really important point. Okay, so what do we have going on here in the markets today? Let's take a look. We have basically the Dow up 66 points, basically flat on the day. The NASDAQ is up 60 points. That's a decent little 1/3% move. And the S&P is up about 0.4% or 23 points. Oil, again, down. Look at this, guys. Down 1.6%, another $1.16. We are at a key pivotal level of support. If this breaks, watch out below on oil. Gasoline, we'll look at that chart quickly as well. Gold today, flat to negative, down about $2. And Bitcoin, this is big, guys. Bitcoin is testing that pivot line, that 61.5 area. This is a big level. If we can get above and confirm, you should head back to 70. Altcoins are also jumping. We already closed out a nice winner in Smart Money Crypto today, so congratulations to members in that. Heat map-wise, generally a mixed bag. We got a little bit of red, a little bit of green, a little bit of gray. So generally, this is just giving us a vibe of how the market did overall. And for the most part, it was flattish on the day. You can see Google was down, Microsoft was flat to negative, but of course, Nvidia was up slightly or is up slightly on the day. Apple was down slightly. So the big cap tech, kind of a mixed bag today, which is why the markets are essentially flat on the day. All right, let's flip right over to some charting because we do have some earnings after the close today. I want to keep you guys posted. Before we do that, let's look at the daily S&P 500 chart. The big thing to view here is that we've had this monster rally on the S&P. This is looking like where we might want to go. There's a gap fill right here. So it's just a little ways away, about $4, a little less than $4 away on the SPY. But again, I would just caution everyone. What I talked about at the start of Trading the Close in terms of the Fed's commentary in their minutes today, that should be an alert. That should be a big red flashing sign that says caution. Because again, when you look at gasoline, when you look at oil and what those things are doing, and those are big traders trading that, and we're seeing those dropping so sharply, it's telling you something that the market is likely mispricing the chance of a recession or at least a decent slowdown. So yes, it's up. Maybe we get up here, but I still am in the camp that I don't trust this move. I think the volume being as light as it has been, the lightest in over 2 years in the market recently in late August, which is normal for light volume. But you can't trust moves on light volume. It tells you there's no big money behind it. And the big money is the important money when it comes to real direction in the stock market. All right. So what else do we want to go into here? Let's take a look at a couple charts. Quickly, we're going to go in oils. Oil chart, take a look at this drop, guys. Another down move on oil. In fact, we are now back to the lows that we were at on August 5th when the stock market was down at the lows. So oil has done a full round trip at this point, and that, again, is not a good thing for the economy because of the demand side. Remember, oil and gasoline is even more so that. Let me flip to that gasoline chart. Look at gasoline confirming below this key breakdown level. Whew, not a good chart at all on this. I actually have my target laid out where in the commodity service I'm going to look to be buying down at 53 on the UGA, which is the ETF that tracks gasoline. But my point here is gasoline has already broken that August 5th low when the stock market was at its low. And gasoline, we travel with it. So when we go on vacation, we drive anywhere. When we go to work, we're using gasoline in general. When we go to the store, we're using gasoline. The fact that it's making lower lows here is telling you something about the economy, both domestically and probably globally as well. All right, so that's a caution sign right there. That's what I've been talking about here. I want to show this. When the Fed minutes came out, we did see yields coming back in a little bit more. If we look at the 10-year yield, we are back to about 3.7% or so, 3.79%. But nonetheless, look at how yields also bottomed out right here, right? So we bottomed out right here when the stock market bottomed out. We did go up, just like oil and gasoline rallied the first few days, and then yields have kind of trailed off here. And again, yields are a very good indicator as well of expectations by the bond market for how aggressive the Fed will have to be on cutting rates. And remember, the Fed's not going to be aggressive on cutting rates unless they see a recession or they need to because of economic weakness, right? If anything, they don't want to start up inflation again. And they would start it up, frankly, if we saw, basically, if they cut too much and the economy doesn't slide into recession, it's going to create inflation. It just is. Okay. Next up, I wanted to quickly go to the U.S. dollar chart, the DXY here. Look at the dollar continue to break lower here, guys. Daily chart on the dollar has now broken key technical support. I think it's going to 95. 95.50, that's my DXY target to the downside. Now, it's not going to go in a straight line. Charts don't go that way. Very unusual for them to do that. But in general, you'll get bounces and then further lower lows on the U.S. dollar. And a weakening dollar like this, again, spells trouble. It means the economy is likely weakening substantially. Therefore, the Fed must cut rates more aggressively. The lower rates go, that's more money in the system, more money's being loaned, etc. It weakens the dollar. More dollars, essentially, mean each dollar is worth less against other currencies. All right, next up, let's quickly take a look at Nvidia today. Nvidia with a small little update today. Not much going on here. This is a key level I'm watching. I talked about this in the game plan today. As long as price stays right above here, you have a neutral to positive bias. If a daily close occurs below this line right here, right around 126, then the downside is quick and very, very big, most likely. We would most likely correct down into this zone right here. There's a lot of support right in here, right around 116. So watch that pivot point. This is a good pivot line. And again, as long as we stay above, which we did today, you could go up a little bit higher on Nvidia, but any daily close below there, that's where you start to see that downside. All right, next up, let's take a look at some of these earnings numbers after the bell. So far, Wolf doesn't look like Wolf has reported just yet. This is a small company, I think only about $1.5 billion, but the implied volatility is 28%, folks. That means that traders here are expecting a major move up or down on Wolf. This has been one of the ones that I've kind of played around with because it's so beaten down. You can see if we zoom out on this chart, it has been in a downtrend, precipitous downtrend. Look at this. I mean, just constant downtrend. But it does have a trend line down here of technical support. So again, we'll have to see what happens on earnings here in the after hours. When they report, I will keep you guys posted if I see the movement during this. Zoom today, reporting after the bell. Looks like Zoom is upticking a little bit on earnings thus far. Not a big move yet. This is, again, one of the companies I've talked about quite a bit, how it's trading at valuation levels that make it very attractive. And again, it's not to say they don't have competition. They have lots of competition. But still, at least as a company, when I do a meeting, it's usually on Zoom. Still on Zoom. Zoom has a place in our society now. It kind of, a cult following, if you will, where people just use Zoom. I mean, I haven't gotten used to other platforms yet. Either way, upticking just a little bit. I could see this going as high as $67 if they report, again, a good number. I don't know if earnings are out yet. It's not moving enough yet to tell me that they're out, but it is upticking going into those numbers. Snowflake's a big one here, guys. Snowflake in the after hours. It looks like it's upticking a little as well, but certainly not a big move yet to speak of. So we'll be watching this very closely. I'm going to wait one more minute to see if these numbers come out at 4:05. A lot of times companies either report at 4 o'clock, 4:05 p.m. Eastern Time, or if not 4:05, then often 4:15 p.m. By the way, next week, Nvidia earnings, Wednesday after the close. That is going to be wild. I was just saying this to members that Nvidia earnings are probably the biggest earnings report of the entire season. Even when you go back to days where we had multiple mega caps reporting, I still think Nvidia is number one, and this is why. It's because the market has had this monster move up on the back of AI and chip stocks. And so this is the brand name. This is the one everyone knows. Everyone knows Nvidia. And if they fumble the ball, that's bad. If they can hit a home run, markets could continue to move higher. We'll have to watch and see. All right, we're just about to hit 4:05. Let's just see if we get some numbers out here or some bigger moves on Snowflake. We'll see again. Oh, whoa, there you go. Yikes. Woo. That's a big drop right there. So you guys see how that happened right at 4:05. And by the way, that's not retail. This is not retail. That's algorithms that are reading the press release within a split second and reacting to keywords in that thing. So again, sometimes those can be wrong and it can go all the way back up. But this was a great drop from 135 down to 123 in a split second. It's pretty incredible. Let's go to the other charts and just see. Ooh, yeah, Zoom, rocking. I have this as a swing trade long in smart money stocks. So love seeing that move to the upside. Great pop initially. Let's take a look. Wolf is down a little bit on earnings, although not a big move at this point, so we'll have to watch and see. But again, just down a little bit on earnings there in the after hours. It doesn't look like a big move at this point. Maybe implied volatility wrong on that one. We'll have to see. But let's go back here. We do see Snowflake, which is probably the biggest company today reporting. This one is down decently. Again, it could turn around, but again, right now it's trading back to the lows. Look at this, going even lower. In terms of a technical level, let's take a quick look at the daily chart. Where is my first key support? I actually already have it marked off. I had my resistance and support levels marked off. I think first support comes in around 112. So unless it gets down to 112, I'm not going to mess with it. And again, as a disciplined trader, just because you want to trade doesn't mean you should trade. You have to use the levels. If you don't use the levels, it's like basically closing your eyes and trying to fire, right? It's just like, you know, like the odds of you hitting a good trade are very, very low. You got to use the charts. And if there's not a trade to lower, then I'll step back. And maybe it doesn't hit. That's okay. A good trader trades less to make more. The newer traders, and I was a new trader at once, believe it or not, at one point. I used to love to be in a trade all the time. I always had to be in a trade. And you know what? I lost money. So once I learned to trade less and take only the best setups, that's where the money started flowing in. And that's what we're here for, guys. I'm here to help you guys work through this, both as swing traders, day traders, and investors. Verified Investing has got your back. So as always, folks, I'm going to get going, but thank you so much for tuning in to Trading the Close. We'll talk to you tomorrow. Take care.